We're taking a look at the currency market now with Shireen Darmalingam, Macroeconomic Strategist at Standard Bank. Thanks so much, Shireen, for joining us this morning. Taking a look at the Rand this morning, nearing one-week highs at this point, and a Reuters poll yesterday saying that South Africa's Rand is likely to rebound 5% over the next 12 months as it recoups losses that many forecasters have been saying looked overdone in the first place. What have you made of that which has come through, where 770 is the target over the next 12 months?
Well, although commodity prices were seen moving sideways yesterday, the fact that the dollar strength has run out of momentum and equity markets are rallied in the wake of yesterday's better than expected jobs data, and the fact that suggestions coming out of the EU that officials are looking to recapitalize the banking sector there ensure that the Rand enjoyed extended short covering yesterday. And if Rand bulls continue to breach 790 to the downside and move towards 754 is entirely plausible in the short term. However, in the medium term, we believe that the Rand will remain vulnerable to those twin global evils, namely the poor global growth outlook as well as the high sovereign debt levels, and including the fragile domestic economic backdrop that we're seeing. So we do believe that the Rand could possibly end at about 820 towards year end, but we wouldn't be surprised if it does continue to benefit in the interim from the temporary relief of the rally of risky assets in what has remained a very bearish global cycle.
Temporary relief, that's the phrase that needs to be highlighted here, because the caveat to it all is that a forecast like this hinges on an improvement in the state of the global economy, which should then redirect capital flows in theory to emerging markets like South Africa, right?
Yes, that's correct. But we do have to remember that, as I mentioned before, the Rand has been has been at the mercy of this global sentiment. And if we see risk-off environment continue to return, we could see the Rand come under pressure in the coming weeks. So that temporary relief is what is the highlight at the moment. And if that is not, if we don't see that risk-off environment being sustained and we see risk-on environment, we could see flows coming back to the country as well, and which could obviously see the Rand strengthen. Yeah. But we do believe that a move towards 820 towards year end is plausible.
So far, the Rand is the fifth worst performer against the dollar this year, having lost 23% since January alone. We've been saying all along that liquidity in this market makes the Rand more susceptible and more vulnerable to the kind of movement we're seeing. We had Finance Minister Pravin Gordhan saying that although government would like to see a more stable Rand, it's at a loss on how to actually achieve that. Any viable solutions from your end?
Well, as you know, the Reserve Bank has also indicated that they're at a loss and that they won't intervene in the market to influence the currency. So we are going to remain at the mercy of this global sentiment for some time, and there's nothing really that they can do at the moment to cause the Rand to be more stable. So what we are looking for is stability, but that's not likely in the next coming months, given the fact that we do expect the Eurozone debt crisis to linger for some time, and that the global growth outlook is expected to deteriorate further before it gets any better. So improvement there is not forthcoming at the moment. So we do expect that volatility in the currency to remain within the next couple of weeks towards year end.
Well, we've got all eyes on policy and measures to help things along today. The focus is on both the BoE and the ECB and their rates meetings. What are your expectations there?
We do expect some monetary easing to come from the BoE with asset purchases of about 50 billion. We don't expect the ECB to, well, we do expect the ECB to cut rates, but there is some concern that they may not cut rates given the fact that Jean-Claude Trichet, it's his last meeting today, and they could possibly wait until November. However, I do believe that they should cut rates at today's meeting instead of waiting for November. I don't believe that he should be looking at his tenure and what he has achieved rather than looking at what the economy actually needs. So I do believe that what they should do is cut rates at this point. So we do expect some easing to come from both the BoE and the ECB.